What's good, everybody? No bullshit. Let's get straight into it. Y'all see, hey, we've been having a magnificent month so far. And let's go ahead and just so y'all can see, right? I want to break down today's trade. Now, I can definitely review this past week for y'all. Y'all drop a like. Let's say what? We get to 200 likes. You feel me? I'll go ahead and recap this whole week for y'all if y'all want me to. But so far, right? August has been amazing. We're already starting off the second week green. You feel me? No, nay, we ain't no losing days. You feel me? But obviously, y'all see, taking L's. You see this minus 600 here, but you feel me? The risk to reward is always gonna outdo it. But like I said, I'm starting to yap. Let's go ahead and jump straight into it. First, you feel me? I just want to show y'all, there's a lot of bullshit ass gurus online and shit. Y'all see 10 plus whatever. This is the 1600 from today on my live account. This is my let me just jump into it. Y'all see it. I just want to, you feel me? Because people be showing a lot of bullshit online. I just want to fact check for y'all real quick so you can know you can actually trust my advice. Now, boom. Let's go ahead and jump into today's trade. Now, I'm going to show y'all 3 different opportunities on where you could have and should have got in today. But if not, hey, if you didn't get in, you didn't make no money today, hey, go ahead and just learn from this video right here. So first things first, hold on, I'm gonna turn this off because I don't like all these. Boom. All right. So first things first, right? Just leading into today, right? Stretch this out a little bit more so I could really show y'all. Okay, boom. So price, or I don't even know why I'm on here. Well, it don't matter. It's the same charts, same shit. But let's jump into it. So boom, off rip, right, on that 1 hour, we climbed our way up here, boom, boom, boom. We got into this 1 hour order block, which is the most recent high. And we started to dip off a little bit. So this was London session. Boom, we made our high during London. We started to trail down. Now with us breaking these lows, breaking these lows, breaking these lows, and me seeing that upon, New York session, just waking up, I said, okay, I'm not going to say we flip structure yet, but I can definitely see how this isn't just going to be some type of immediate bullish day, right? So instantly I'm coming through like, okay, there's signs of, it could be bullish, definitely, because overall, we've been having bullish markets, but y'all know I'm in and out 1 minute, 2, 3, 4, 5 minutes sometimes, up to 30 minutes max. Y'all know, you feel me? I'm going to start definitely bringing y'all some more consistent vids. But y'all know I'm normally in and out within 30 minutes, right? 9:30 start, 10 a.m. done. You know what I'm saying? But I don't want to drag this video out too long. Make this short and sweet for y'all, just so y'all can learn from today's trade, but also pick up on what else you could have taken as well, just from my perspective and my strategy. So let's go over to, So yeah, 1 hour. I gave you my bias on how I was feeling on the 1 hour. Mind you, price was what? Price was like here when I woke up, 9 o'clock right here. Yeah. So boom, off rip. Like I said, we broke a little bit of a structure. Boom. At that point, what do we expect, right? When price breaks structure, probably expecting it to start, going the opposite direction, right? We've been pretty bullish, but when it breaks the structure point, most likely to get a retracement and then continue on the opposite direction. So with that being said, 30 minute was my next point of interest, I'd like to call it. So boom, off rip. If you can't see it, well, now you do, right? Let's see what time it is. So let's say it's right here. Say we're on this candle right here at 9:30. Immediately, 2 things I want to note. And I believe this video on the breaker block, I don't think I've ever showed y'all the breaker block on YouTube. That's more of my, for my exclusive mentorship students. But I'm gonna go ahead and show y'all a little bit of sauce about the breaker block today. So first things first, on the 30 minute, right? We have a 30 minute fair value gap right here that I marked up. Not only that, it overlays with this 30 minute breaker block. Now, if you don't know what a breaker block is, essentially, to give y'all a quick, drop breaker block in the comments, and I'll give y'all an in-depth video on that as well. But like I said, 200 likes, and I'll review the past week of me going green on green on green. Today, we're just starting off with this one trade example, or this one session. So boom, we got the 30 minute breaker block here. We got 30 minute fair value gap here. So ultimately, like I said, what I'm looking for is price to retrace into that point of interest and then continue on to the downside, right? Y'all know I'm a scalper. I'm in 1, 2, 3, 4, 5 minutes. Cool, right? It could be a couple minutes, 10, 15, 20, whatever. So I'm not looking for like a home run move. I tell my students all the time, you could take base one, you could take whatever, what's it called? First base, first base, first base. Guess what? After 3 first bases, now shit's loaded. Plates is loaded. Now you hit that home run. Whoo! And you up dog shit for the week. That's essentially what I did right here last week. You'll see the consistency, right? Start off with a smaller profit day. Same here on Monday. But then boom, carried that on, made some good profits. Boom. Not too much here, but then boom. Bases was loaded. You feel me? Green on green on green on green. Hey, I had a good opportunity on Friday. Bases was loaded. We go stupid. So same thing kind of here, right? This is just a base one hit or first base hit. I ain't never played baseball. I don't know where this reference is coming from, but essentially, boom. So although price maybe have probably been more bullish on the day, like I said, from my bias and what I found and the type of setup that I'm looking for, I can get in and out in a couple minutes. I'll take the sell and boom, even if price turns around, no problem. So let me just jump into it. I'm yapping too much. Make this quick, short, and simple. So I gave y'all my initial bias, right? I gave y'all what I had as my point of interest, which was this 30-minute fair value gap and this 30-minute breaker block. Now, this gives you a better representation of what a breaker block kind of is. You see these lows right here. Okay, we swept this low, we swept this low, swept this. But this is like the most significant one right here where price really started moving, right? See how we broke this low, right? We broke this, but then we retraced right back into it. On the higher time frame, that was our 30-minute breaker block. On the 1 minute, it just looks like, a break of structure. You know what I'm saying? That's why the higher time frame is more significant. Always get your point of interest from the higher time frame. Then you break down and make sure it all makes sense on the lower time frame for you to get your sniper entry. So that's exactly what I did here. Boom. I had reasons as far as the market structure we've been getting, as far as my higher time frame points of interest, as far as me just being an expert at NAS, been trading this for 6 years. I just, I know the tendencies and, how NAS really moves. Put the little light on for y'all. Hold up. Put the little light on. But yeah, so ultimately, price came in right here, 925 or 928. Boom. Now we came up on this 1 minute, right into my point of interest. We rejected. We rejected. We rejected. We rejected. You had 4 minutes, 4 opportunities to get into this sell, which I'll show y'all. Turn the charts back on. Boom. Right? We took the second one. It rejected. Pretty smooth. Came down. Came back up. I got my entry. Boom. What do we do? From here, dropped damn near 100 points. TP hit. It's really that simple, y'all. It's really, really, really that simple. Now, if you don't understand what I really went through, you definitely need to go watch all my past recent videos, right? All my YouTube videos on this channel aren't for shits and giggles, right? I give y'all trade breakdowns. I give y'all my strategy on almost every single video for the free. So that's why I say, hey, y'all can show me some love, you know what I'm saying? 200 likes. That's it. Ask for 200 likes. I don't even know what the most likes I've ever gotten was, but boom. I'm giving y'all the sauce. Just holla at me. You know what I'm saying? But I'm going to turn that back off. I showed y'all the entry. I showed y'all the exit live account. You feel me? Cool. Made like 1,600. Cool. Right? So that was the first opportunity, right? Boom. Price came up into our point of interest. Very low risk because y'all know stop loss. With that breaker block being my key point of interest there. I mean, the fair value gap. Plus the breaker block, though. I'm TPing, right? Or my stop loss is right here, right? So we got in around here. We're risking upwards to 10, 15 points. And we're going for 100 in return. So the risk reward is there, right? The higher time frame bias is there. Our point of interest is there. Our market structure, it all makes sense for a nigga like me, at least. So boom, took my sell, made my profits. Now, I do want to say though, I tell my students all the time, this is what I like to kind of call a cherry pick, right? I had multiple confluences to believe that price would sell off when I got in. It's obviously why I risked my money on it, but I wouldn't necessarily say that's an A+ setup, right? It might have been maybe just an A-, maybe even a B+. You see I still hit, but I don't like to teach, especially in my private mentorship, I don't like to teach B+ setups, right? My goal is to help y'all get to that 60, 70 plus 80 win percentage even, right? So, you can have a 60, 70 win percentage and be very, very profitable, right? Sometimes you might take these cherry pick trades, right, and be very profitable. But ultimately, I want to get y'all, you feel me, get y'all a little bit better. So what I would say is this was the better trade to take, and this is what I saw some of my students take today. So price came up into this point of interest that we believe price, would be bearish off of, but obviously it came down, and I got in, I made my profits, but that was a cherry pick. Why? Because my strategy revolves around a second. Oh, well, not just a second. My strategy revolves around multiple confluences that gives us basically a double confirmation, right? So this one was like the first confirmation. I just got in, I cherry picked, I made my profits. Cool. That's why I didn't risk too much. But overall, this right here was the double confirmation that we should always rely on, right? So let me tell y'all exactly why, right? Price opened up, got into our point of interest, it made our move down, right? So if my strategy revolves around a second confirmation, we know once it made this big move, we know what are we waiting for? We're waiting for a retracement to pull back up into that move and waiting for it to collapse again. But we're not just going to get in at any random point in the retracement. Let's look at what we would look for. First thing you know, 1 minute order block. And these concepts are still valid because we have the higher time frame bias. Now, sometimes I see y'all marking up order blocks and shit like that, fair value gaps and shit, and it's not necessarily one you should rely on or something you should be risking your money on because the higher time frame doesn't match up, right? The higher time frame matches up with my bias and what I'm looking for here. Now, the lower time frame concepts, that means they're valid. That means they should play out, right? So boom, 1 minute order block here. Order block is the last up move before this large drop to the bottom. So we have that order block, which I tell y'all all the time. It's like a cushion. It's not necessarily what we're expecting price to get all the way up to. We kind of don't want it to get that high because we're going to enter in a little bit sooner than that. But if it does get that high, we're not going to lose our confidence in the trade because that's our secondary cushion. That's like our safety, right? You got the cornerback guarding the receiver. If he gets beat, you got your safety in the back, right? The order block is like our safety. Simple, right? So we came up here. We had this liquidity up here. That price left, dumped down, left a 1 minute order block. Boom, made a pretty big move. What do we do in this move? We swept these lows, right? So we broke the structure point, right? Well, boom, yeah, right? We're continuing on with the structure, right? We're breaking this low, making new lower lows, right? What does that ultimately tell us once again? That price should continue on lower, right? So what do? Mark up once again. We had another 1 minute. I'm gonna start here. I'm gonna type these out for y'all too. This is probably why I should go to TradingView because all these colors and shit is ugly. Let's change that to black. But we had the 1 minute fair value gap here. 1 minute order block here. Y'all know on the higher time frame, what was this one right here? Just so y'all can see, right? I just want y'all, I don't want nobody to be confused. And if you are, go watch all my other videos and it's gonna change your life. No cap. What is this? 30 minute breaker block. And last but not least, this last one was the 30-minute fair value gap. So we had, like I said, multiple confluences, multiple reasons to believe that price would deliver lower. We just need to get the right entry and get the right exit and get that money and get the fuck out of here, right? So boom. Like I said, I cherry picked this entry. Boom. Now the extra confirmation is perfectly right here in front of you, right? 1 minute order block, 1 minute fair value gap. All we need left, take this Fibonacci from the high to the low. Yeah, get him out of here, coach. All right, hold on. Let's go to TradingView real quick so I can have all my settings and shit. Sorry about that, y'all. I don't really. All right, boom. So fib from the high to this low, right? I can't make this up, y'all. I cannot make this up. Now, like I said, this isn't the trade I executed on because I already made my money. Y'all know once I make my money, I'm good. I'm gone. I'm out. I don't need to do too much. But for my students who waited, didn't take the B plus setup and waited for the A plus setup, y'all niggas got a perfect entry, right? Fair value gap here. Let's mark it up again. Order block here. Fair value gap here. Now at that point, all we do is wait for price to dump until it stops. Once it stops, we pull the fib from this high to this low. And what do we get? a perfect retracement right into, what is this red line? What do y'all know? OTE, right? This is our OTE. What does OTE mean? Optimal trade entry. So boom, with price leaving the 1 minute order block, 1 minute fair value gap, right? At this low, all we had to do is wait literally to the next candle. As soon as it gets up in there, boom, right on your OTE. Take that entry point right there, put your stop loss at the top of the order block, because we know, like I said, we don't expect price to get into the order block. We already got the fair value gap, we already got the OTE retracement and the order block. That's like the last resort. Like I said, if price gets up into there, it should hopefully get into it, bounce right off, and continue. So if it breaks anything above this, stop loss. You know what I'm saying? No point in risking more on that trade. If it breaks above that, it's most likely probably going to flip back bullish. So boom, order block, fair value gap, retracement, perfect entry point right here, stop loss right at the high of the order block. And what did that grant you? TP right at the bottom. That granted you a 1 to 5, close to a 1 to 6 risk reward, right? So I showed y'all my execution, just to be real, raw, and authentic with y'all. Showed y'all my execution, which was like a B+, right? I show y'all what I teach my students and what I normally do, right? I normally do wait for these extra confirmations. Today, hey, I adapt sometimes, right? So this is the trade I should have took, but not just that, right? This is the trade I saw a lot of my students take because it's what I teach them, the A+ setups. Boom. Now, let's go ahead and the last potential opportunity, right? Because I like to also go over the reversal points as well with y'all. Because like we know, price was only bearish for maybe about 120, 30, 40, 50 points max. And then it went pretty bullish after. So what do we take note of? Well, first things first, right? Same thing on the opposite end. This was the last down candle right before this big explosion to the upside. So let's move all this. Boom. We have our 1 minute order block right here, right? 1 minute order block. Hold on, let's first, because look right here, price started here, made this big boost up, didn't retrace, and then kept going. So first we actually have this 1 minute fair value gap right in here. Well, first we had the order block, but I just want to do that just so y'all can see the visual. So first we had the order block, then we had this fair value gap. Mark those two up. Now the main key, most important thing left is this break of structure here, right? When price broke, same sort of similar thing, right? Same concepts. I teach y'all the same shit over and over, right? Price broke above this wick. It broke above this high. That's our break of structure right there. Because if we're going higher high, lower low, lower high, lower low, lower high, lower low, we shouldn't come up and break this structure right here, right? We should come up and make a lower low. If it comes up and breaks that point, the next thing we should look for at this, oh shit, break of structure, the next thing we should look for is price to retrace back into it somewhere, right? Somewhere, apparently. We don't know where. No, we know where. Order blocks, fair value gaps, OTE retracements. So when we're looking, we just understand the market structure here, but then we get those concepts down to get our precise entry point. So boom, same situation here. Let's say there's an order block here or a fair value gap there, order block at the bottom. Boom. Let's say your fib from the low to the high. Oh, wow. Matches right up right here perfectly with the fair value gap. That's when you take the buy entry. You feel me? And get that money. So let me show y'all the real life example. Right? That's pretty good markup right there. Pretty good example. Hopefully y'all learning. Like I said, any questions y'all got, drop it in the comments, man. I'm really trying to level up this YouTube for y'all. But so boom, order block here, fair value gap there. Now all we want to do is take our fib. Right? Now, it doesn't necessarily hit all the way fully to the OTE, but as y'all know, right? That's why we stack multiple confluences. We're not just looking for just a red line to get tapped and we get in, right? That's just the best possible, most optimal entry point. But if we have the fair value gap here, the order block here, and price comes down very close to our OTE, we can still enter that. And what do? Go straight up and take profits, right? Say you even, all right, so what I want to, a rule of thumb I want to give y'all, let's remove these. Y'all get the point for those. A rule of thumb I want to give y'all is the OTE is most optimal. That's why it's red. But anywhere between the, because we have these extra levels for a reason, right? If you don't know what the 50% is good for, the equilibrium, you need to watch my old videos, right? You need to watch all my videos until you understand what the equilibrium is, because you should know, right? But we don't really take trades off the 50%, off the equilibrium. Now we take trades within this range here, the 62% between the OTE, or not between, the 62 and the 79 right here is our golden zone. The red line, though, is just the most optimal entry point, right in the middle. But overall, we could take entries at the 62, at the 70, or even at the 79, just depending on what our other confluences are telling us. So in this most recent case, right, we had fair value gap, we had order block, right? So by the time price comes down, taps into our 62%, we're good for entries. Good for entries. Stop loss at the, once again, bottom of the order block. You had room, right? We had room. It could have came down. We had room. We chilling. Risking about 17 points. Put our TP at the most recent high. 1 to 4 risk to reward. If you don't know what a 1 to 4 risk to reward is, that is a get rich ticket. Not quick, but that is a get rich ticket. If you can consistently catch 1 to 4 risk rewards, hey, I'm going to see you at the top real soon. If you can consistently look for this setup, I'm going to see you at the top real soon. Definitely. So I feel like I didn't even mean for this video to be 21 minutes long. My fault. But like I said, I like to give y'all the knowledge. I like to give y'all the sauce. You feel me? Like I said, me running up this bag. You know what I'm saying? Running up this bag. Motherfucker. On the, oh, get this shit off my screen. But like I said, if y'all want me to review the most recent week, 5 green days in a row, you know what I'm saying? 200 likes for me. If you really listen to the end, all right, so I got a couple things for y'all. We need the likes for the next video. Comment breaker block for me to show y'all the breaker blocks more in depth. But also, if y'all could for me, much love to everybody who's showing the support, man. If y'all could comment 444 in the chat, I'm gonna know you watched all the way to the end. So I appreciate y'all. And like I said, the more y'all show love, the more I'm gonna keep bringing y'all some more sauce. So I'm trying to see everybody win. Let's get to this motherfucking money.